Hi guys, this is Aussie Ty from A Crypto Current Affair, and we're at the Sydney Crypto Meetup tonight to hear about Wanchain from the founders themselves. We've also got some other speakers tonight, so stick around and we'll see you up. I've got hyperlinks down the bottom there, so if you want to jump to a particular question or a particular topic, you can go straight to there.
Yeah, you're back.
Okay, great.
So is there more information you had and another section?
Yeah, we also want to talk about our roadshow, our plan. I think we put out the schedule. Do we have a schedule somewhere? We just went to Hong Kong in the past few days. A team of three of us went to Hong Kong.
That was actually going to be one of my questions. I was going to ask how the reception was in Hong Kong because I spent time with you guys in Miami.
This is Justin Lau.
Hey guys, what's going on, Joey?
Hi Justin, how are you? Nice.
Hey, good to see you.
So Justin's helping us with a lot of our crypto finance apps. He comes from the financial service world, hedge fund world. So he's been in the accelerator. He's been we kind of have a lot of different project managers that we drop into each of the projects to help them. You know what you end up happening is you get these people with a lot of like domain expertise. And great vision, but it's a whole other thing to launch a successful project. A lot of unknowns, and so thankfully, we've been through this process, Jack quite a few times. So there's a lot of like kind of like landmines everywhere into taking that idea and that vision into making it a reality. And so Justin's been helping us do that. We have quite a few other team members too that are also working directly with these applications to help them navigate. Leading is another. This is who's leading.
Hi guys.
Yeah. So
Nice.
Sydney.
Melbourne. I'm not sure this location is Sydney.
So Sydney, yeah, Sydney.
Oh, okay, I'm a chessboard guy. Hi.
So I remember spending time with you guys in Miami. You guys were almost the only show in town. How's the reception been at Token 2049 in Hong Kong and South by Southwest and a few of the other things you've been attending? Is the hype still?
By Southwest first?
Yeah, Southwest is great. We had the home court advantage there, being from Austin, and we're the founding patron of the Austin Blockchain Collective, and which is a group of now 67 blockchain projects in Austin. And so being a platform is very I kind of just think about networks all the time, both virtual networks and physical networks. So we're the only platform in Austin, and with all this budding activity in the blockchain space, I've been working to pull all of these projects together, and a lot of them are very interested in building on Wanchain longer term. And so the reception was really good. We spoke on a panel about just sort of like how much activity is happening in Austin, and then in Hong Kong, Jack gave a talk about China and about his journey in China and all the activity that's happening, still continues to happen in China. And so we're fond of saying that we're not only cross-chain, but cross-culture. And so I think there's a big value into kind of also building a bridge between the East and West.
Yeah, that's fantastic. I've actually got a lot of questions about China as well, but
Tobias, just to give a little bit more update on what's coming up. There's I think this weekend we're gonna have a blockchain forum in Beijing. We are having multiple projects. Basically, have a mini conference in Beijing. There's March 24th and 26th. We're gonna have a global blockchain conference in Hangzhou. We actually invited many blockchain companies around the world into that place. It's a G20 place. I think G20, right? Yeah, G20 on 26th. It's a one-day event. We also invited Ion and Icon to join us, and also Kuiper Network as well. So we want to come up with the roadmap for the interoperability alliance, and trying to create next steps how we want to work together. And we also invited the government officials to join us, them to back us to come up with the standards basically for the future TCP/IP of the Internet of Blockchain. So I think all these are small steps, but I think it's very important for the alliance to move forward to get the backups from the government and also from the other companies as well. I think we're trying to expand the alliance. We will come up some kind of rules to attract more companies, blockchain companies, to join our alliance.
Great. And the one question I'm going to have to ask.
April 4th.
Sorry.
Okay, go ahead.
Yeah, one question I'm going to have to ask for my safety, otherwise I won't be able to leave the building. Yeah. And it's best coming from you guys is not so much when, but what is going on with the exchanges? Because I think everyone wants to know.
You want to take that one?
Yeah, I mean, it's kind of. I've said before I'd be surprised if it was later than February, early March. Well, I'm surprised. Like I am, and we all are. It really is something that's out of our control. We do know that the exchanges are pinging our APIs, and we can see that, but we're not quite so sure why it's taking so long. But we do still think it's going to be soon. But it's not. This is I'm not sure if a lot of people don't necessarily know how the process works. It's not our development team that's doing the integration. It's their development teams that are doing the integration. So some people are kind of like making the assumption, I don't want it to reflect poorly on our development team because they're also out there working really diligently on 2.0 and they don't have anything to do with the exchange integration. The other important point to get across is that protocol tokens that are all their own blockchains do take much longer to integrate because there's like a whole testing cycle that has to go on as opposed to just doing another ERC20, which they've effectively exchanged have like a template. They just push them through. It takes a week. I've heard as long as 3 months to take to build a protocol token. So it's there's that. I think that like core time delay just as a result of the length of. But even that being said, we still are a bit surprised at the length of time it's taking. And I understand there's just a lot of interest in in getting these coins listed, and so we're totally aligned on that. There's definitely no hanky going on here with us trying to slow roll the exchange listing because of the market. If given where the market is, rebounding right now, like I would love the coin to come out at this point. It's just I didn't have control a month ago, and I don't have control now. So you can clap if you want, but you guys, if you want to reach out to exchanges yourselves and put pressure on them, you feel free to. But it's just really.
All of them. That was a really good answer, and I really want to open it up to the floor. But there was just one good question that came through to me, which was, do crypto assets really have a future in China? And as the current Chinese government moves against cryptocurrency trading and ICOs, they're going to have an impact on something like Wanchain? Or do you think it's going to open up, and can you see collaboration between Wanchain and the Chinese community, or even the Chinese government in the future?
Yeah, I'll take that one. Actually, I gave a speech in Hong Kong about just China's policy and its impact on the token economy. And as I mentioned, the token economy is coming, right, around the world, and it's not stoppable, right? And China has been doing regulations or restrictions on Bitcoin many times. Back in 2013. I experienced the whole thing, right? They basically put a restriction on the exchanges and all the relationship with the banks, and it caused a big meltdown of the market. But eventually, all of that came back up, right? And the industry just, can work around very quickly, right? And China has banned it multiple times. And the recent event is, I think September 4th, it banned ICOs, and also we'll be targeting on the exchanges and try to, I think they're trying to cool down the economy. I think there are two things going on. I think the goals for the regulations, two goals by the government. One is not to cause social stability problem.
My name is Bonnie, and I'll be the host for tonight. I basically consult with 2 blockchain companies in strategy and also in legal. And at the same time, I am a co-author to a digital identity white paper for Peking, which is a Netherlands-based company. Okay, so we've got 3 panelists here. Do we all want to just go through, in 3-4 sentences, explain what we're all about and what we aren't?
Absolutely. We kick off. Hi, I'm Steve Hoyt. I'm the Chief Executive of the Enosi Foundation. And the Enosi Foundation has been established to basically disrupt the power industry from the bottom up. We're aiming to build a blockchain-enabled retail software stack that enables small retail communities to set up their own peer-to-peer trading network that allows them to determine their own price of energy instead of being entirely dependent upon the large retailers. So it's a bottom-up play, and I'm really keen to make this disruption. Basically because I've been in the power industry for 35 years, and one of the main things I've learned in that time is that they're not going to do it themselves. I've been developing IT systems, I've been consulting to them, I've been in technology strategy, I've worked at the highest levels of utilities, I've consulted to over 60 utilities worldwide in my career at PricewaterhouseCoopers and IBM, and part of that as a power engineer up here at Osgrid. And one thing I do know is that they have no incentive to do so, to disrupt their own industry. And so if it's going to happen, it's going to have to happen from the bottom up. And the way to do it is to enable people to have the same level of trust with each other as they certainly probably don't even have with their retail. They're forced into in the mainstream power sector. So we're looking forward to making that play.
Hi everyone, so my name is Michael Kong. So I spent a couple of years at the University of Sydney actually studying smart contracts and smart contract security. So I built like a variety of different tools to find bugs and contracts. So you guys might have heard of, the DAO hack and Parity Wallet hack and Parity Wallet hack Block 2 that cost like 200 mil ETH or whatever it was. So I basically built tools to simulate the execution of the smart contract such that, you'll be able to identify or flag potential issues that could cause you to lose like $100 million. So apart from that, yeah, that's right, if you have $100 million. So, all you secret guys out there. So I'm currently a CTO of a company called Digital Currency Holdings. So we're advising a cryptocurrency fund at the moment. We've got set up based in the Caymans. And we're also advising on 3 ICOs. So one of them is his one, the Enosi project. That's a good project. Another one is a new blockchain out of Korea. More details coming soon. And the third one is a medical-based chain with a company that has access to a lot of hospitals up in Queensland. So I'm also in the process of doing some over-the-counter trades as well. So that's sort of my background. Oh, yeah.
Test. Hi, I'm Tobias Abbey. My background has been in derivatives trading for the past 10 years. For the past 2 years, I've been very active in the blockchain space, primarily as an investor. I've also taken on a number of roles advising ICOs and projects. I work with a group of investors. It's almost a sort of decentralized group of investors that pull together funds and look at a lot of projects. Michael's part of that group, and I know a lot of the investors were participating in Enosi, and that's also one of the things that I'm doing in the space. Another thing I'm doing in the space right now is setting up an over-the-counter desk with the Exchange Independent Reserve to offer institutional liquidity for people that want to put large buy and sell orders through, sort of larger than $1 million. As this space is sort of moving so quickly, there's always fingers in a number of pies, and I'm working with people internationally to potentially bring ICOs to the retail market in Australia.
Not all of us would be institutional investors, so can you share your insight?
Yeah, it's not exclusive to institutional investors. It's anyone that can invest in that sort of size, because there's good exchanges in Australia with quite liquid order books. There's no need to go and use an OTC service unless the trade size is above a certain point. but being able to offer these better liquidity terms, and we can tailor-make and structure deals around timing. We were speaking to one particular counterpart today that had issues with their settlement as they had funds coming out of the Caribbean, so we could offer them almost put down a deposit or margin. We can lock in a price and wait for the money to clear while we're providing, locking in the price, and we can deliver the crypto once the funds clear. So I think as more and more professional services come online and make the industry more akin to the original financial services, that it's going to be a good thing for the space.
Power Ledger essentially is doing something similar, which is sort of a peer-to-peer trading company here in Australia based out of Perth. So how do you think your company will be different, and what does that actually mean for consumers?
Yeah, it's probably the first question I was going to ask, and there you go, what's the first question I got to ask? Always the way. The thing is, I wish Power Ledger absolutely the best of luck, because if that happens, if they can enable peer-to-peer trading across consumers, and the retailers that deal with those consumers are really just the back-end hedge into the wholesale market for them, that would be brilliant. That would enable retail and so renewable energy and decentralized energy to proliferate, much lower friction. We wouldn't be stuck with standard feed-in tariffs and all this stuff that are simply not rewarding to the owners of their rooftop solar or even commercial ones. So I wish them well, but they're taking their proposition to the big players, and the big players have absolutely no incentive to do that. Frankly, if I sell my energy for more than the feed-in tariff and you buy it for less than the retail tariff, then I win and you win. Who lost? They did. So they really don't want it to happen. And I know this from personal experience as well, so not just from Power Ledger's statements. This happens also in the retail space all over. So with IBM, in the last 3 or 4 years, I've been leading their worldwide transmission, distribution, and some of the wholesale consulting space for the company worldwide, including a number of blockchain projects. And what we were doing projects with some of these retailers, I can't name, but large-scale retailers, and they're offering to build, they're planning to build these things, but then squashing the projects once it gets to a certain size. So I think the Power Ledger are probably going to be stuck in kind of science project hell for a long time if they're going to take their play only to the big players. The second thing is,
No, it's actually really interesting what you're saying, because I think what my understanding of what Power Ledger is trying to do is to say that in order to enable peer-to-peer trading, the current regulatory framework doesn't allow for that, and so what they do is actually enable a platform where retailers can say you can sign up, and people that belong to those retailers can start doing peer-to-peer trading, which is the only way that you can do it. Is that a correct assessment?
That's not untrue. That's true. You do need the same retailer, but the retailer doesn't have to have 3 million customers. So it could be anybody with a retail license can do that. So why not start from the bottom up and establish the facilities for a retailer to gain such a license, or maybe a small player who already has one, and then enable that retailer to take to market a play that is specifically about the community energy, and allow their customers to do their trades, which would settle first, and the retailer then benefits from growth and as they scale up, and from the opportunity to, for instance, sell you power in the middle of the night. There's plenty of opportunity for them to make money still, and they're champing at the bit, frankly, but they can't do it because they don't have the economies of scale. They don't have the ability to hedge that wholesale risk in the national electricity market the way that the big players do. So they come and they go. They get to a few thousand customers and they fail, or they get acquired, and it never quite gets there. So what we're aiming to do is to open source the software and make it available for free. And we're going to make it available for free for retail, small retailers, or for what we call neo-retailers, community organisations who just want to help their communities out.
So technically you could be collaborating with Power Ledger on this?
They can have the top end of town.
Okay, all right. Well, let's go to Michael and have a chat about what you're doing. I understand that you're a CTO, so I think one of the really interesting thing is what challenges do you think as a CTO actually face? Is that sort of technology that's a problem, like scaling issues, or is it really trying to find the good devs?
Yeah. So when it comes to, as a role as a CTO or Chief Technology Officer, it's a fancy term, but basically, like, because I'm running a fund, in terms of the fund, it's looking at a lot of ICO projects and being like, asking those technical questions. Okay, if they're building a new blockchain or blockchain-based infrastructure, does it actually solve a problem? Does it actually work? Does it actually make sense? Okay, if they're building like an application-based project with smart contracts, I can go through it and look through the code quality. And it also comes down to fundamental business questions like, is a blockchain needed? What is the problem? Does it require a token in order to solve the problem? And if so, does the token derive its value intrinsically from the network itself, as opposed to being the efforts of a third party, which will make it a security? When it comes to issues to do with the blockchain itself, the number one issue I think by far is scalability. So that's to do with throughput and transactions per second. So whoever can crack that while still maintaining having a decentralized network, i.e. having many different nodes and getting consensus from many different players, then that's basically the holy grail. And Ethereum has 5 scaling projects out there. There's Red Betty Blockchain from the University of Sydney. There's Hashgraph. There's a whole bunch of other projects out there as well that are trying to solve the scalability issue. So I think that's the number one issue for blockchains at the moment. I think in terms of security, it's been proven to be quite secure. You can't really double spend on Bitcoin. You can't really do it on Ethereum, because in order to double spend, the amount of money you have to spend trying to do the double spend is far more than whatever value you would get out of the double spend itself, like to the tune of like billions of dollars in computational power.
Okay. So as a follow-up question on, you were talking about the fund and the issue of scalability, I have been hearing a few startups in Sydney saying that, well, we want to do something in financial services sector, but one of the issues is that the current technology is just not geared towards being able to transact. For example, there could be issues with front running and scalability and transaction fees, right? Which is what you've highlighted. And I've sort of mentioned this before at another meetup, but Vitalik earlier this year actually did a podcast with Forbes and said, look, I think the short-term future with blockchain is actually private blockchains, because they don't have these scalability issues. Whereas I think that the holy grail at the moment, or the sentiment of most people, is to say, well, I definitely want to invest in a decentralized project. Do you have a view from a technical soundness perspective how that can operate, or does that affect your investment choices?
Yeah, so when it comes to scalability, there's actually a lot of applications out there that are just running on the Ethereum testnet or Robson. So when scalability is solved, and I think it is solvable, then a lot of these applications are just going to move over to the Ethereum blockchain like literally the next day. So I think for the time being, what you can say in your white paper to justify why you're not running on a public blockchain to begin with, but a private one, is simply talk about scalability problems. You talk about there's only like 15 transactions per second on average, say on Ethereum. The cost is too prohibitive and all that. And so I do think for the time being, there's going to be a lot of applications built on the public testnet or on a private network, and they can still add value in that environment. And then I think when the systems become a lot more scalable, they're just going to flick a switch, and there'll be heaps of applications that start running, say, on Ethereum or any other blockchain that manages to solve the scalability issue.
Okay, all right. Interesting. Okay. So that doesn't impact your investment decisions?
Not really. I mean, what it comes down to so there's the business side of an ICO and the technical side. On the business side, it's asking those fundamental questions I mentioned before, but also looking at the team, the advisors, and just doing the normal due diligence you would do on any company that you're investing in. And then on the technical side of stuff, it's, do they have the technical ability to actually execute what they're doing? Do they have open source code? If they do, look through it. Are there any security vulnerabilities in the ICO smart contract or the smart contracts that they're building for their system? And also, in terms of like the technical information in the white paper, how do they describe what they're doing in a technical manner, and is it sufficient and does it make sense? And obviously, in terms of an ICO, is it getting a lot of attention as well? So there's a whole bunch of factors that go into, whether or not to invest in an ICO, but like those are generally the broad factors.
Sure. So if you look at the top 100 cryptocurrencies at the moment, let's say in CoinMarketCap, nearly 99.9% of them call themselves utility tokens. Would you invest in security tokens if it's a really good project, i.e., for example, they actually tokenize traditional assets?
Yeah, I'd be interested in investing in security-based tokens. Most of the tokens we're investing in at the moment are what are considered to be utility-based tokens. And there's ways to determine whether or not the token is going to be a utility or security, and that is, you got to look at how the token actually works in terms of, does it derive its value from within the network itself, interactions within the network, as opposed to the efforts of a third party? Is it being marketed not as a security, i.e., like, very bad idea for any ICO to go out there and say, talk about profits, investments, making money from the token and all of that. You can't do that if you want to create a utility token, because what you're doing is just selling a product as opposed to a security. So I'm definitely interested in all sorts of tokens. If a security token is actually solving a real problem, I'm definitely interested in investing in that. Yeah.
Okay, so I'm just going to open it to the floor.
Awesome, great. Can we get that mic on? You're going to open it to the floor. We got any questions from the floor? One up the back, one over here, catch. Awesome. You just speak into it and then...
Oh, there we go. You were fairly bullish on Ethereum. I think there was a question just now in terms of where would you go in terms of blockchain. You were fairly positive about Ethereum. Do you think Ethereum is going to resolve the congestion and the other issues that we are seeing at the moment?
I think there are a number of projects out there that could do it. I think the project that's most likely going to succeed at the moment is Ethereum, because Ethereum has a large number of developers on it. It actually has more transactions than the other blockchains, I believe. And also, there's essentially 5 main scalability projects for Ethereum. There's Plasma, Raiden, TrueBit, Casper, and Sharding. So if any one of those succeed of the 5, and I think more than one are going to succeed, then you can easily see the transaction throughput increase from 15 transactions per second to like into the thousands. And that means that the system is going to be a lot more scalable than it is at the moment. Cost per transaction is going to go down significantly, and so you're going to see a lot of applications switch over. But there are other blockchains out there, or technologies I just mentioned, Red Belly, Hashgraph, there's a whole bunch of others as well. So, I'm agnostic to like what blockchain succeeds, but just objectively from what I can see at the moment, I think it's most likely going to be Ethereum at this point in time.
Just one last one. You weren't that keen on the security token. I'm understanding it's mostly because of the current regulatory environment. Is that what's turning you off the security token as such?
That is true, yeah. So when it comes to security token, it's also about, okay, if it's going to be security, where is it going to list at? How is it going to be tradable? In which environments are they going to be tradable in? And at the moment, there's no real exchange out there that's willing to trade security tokens from the right from the go. I mean, there are a few exchanges coming up like T0 that a lot of people know about, where they say they're going to be SEC regulated and all that, and you'll be able to trade security tokens. But we just don't really have a very liquid environment at the moment. It just doesn't exist at the moment. Yeah.
So, sorry, can I just quickly jump into it and actually comment on it, because I'm a regulatory lawyer from last year. Essentially, I think that the really interesting thing is it's true that SEC has come out and said that all the tokens that they've seen would constitute utility tokens, and most jurisdictions follow the US. So I think that that is a wave that's coming, but if you take a look at what can be tokenized, there's so many things that can be tokenized that has really low liquidity, for example, like the global real estate market or even fine art. If you can tokenize that and actually own a part of that, the liquidity premium that you can unlock is multitudes of the current crypto market. So I think that in some ways, and I've spoken on this panel a couple of times, and I think a lot of panelists would agree that that is the inevitable future, and that is really the value unlock. Because if you imagine there's so many utility tokens around, utility tokens are there to transact something. That something has to be assets.
Cool. Question up here back. Toby, did you want to...
Yeah, I was just going to say, I completely agree with those sort of sentiments, but I really think security tokens are going to be the future here, and what's holding it back is no one wants to be first through the door because they're probably going to get scrutinised and essentially shot by the SEC. So it changes the whole financing fundamentals for the entire world, because instead of having some complicated network that you want to have a utility token for. You could literally finance a chain of coffee shops or something really simple. Like a normal, everyday business can be funded through the ICO model once we accept that you can have a securities token. And that can be done in an international, sort of transnational, borderless way once we have the framework for that. So although it's slow coming and it'll probably take longer than we expect, I definitely think that's the way the future's heading. So, yeah, I think that's something that we should be looking to embrace, and all the regulatory work coming from legal departments. And I think Australia's actually going to be really progressive in it. I know ASIC's looking at all these things, and we're one of the better countries to embrace this technology, and I'm hoping we'll be a world leader in it rolling out.
Awesome. Question up the back here. Okay, Michael, agree with your thoughts on two parts. You mentioned on blockchain. I agree blockchain security is secure to cryptographical algorithm, and scalability. Let me just talk about that, because if blockchain is so secure, why are exchanges, ICOs getting hacked all the time, right? Don't you think, securing the private key, the thing that unlocks the door, is the most important problem versus trying to solve a mathematical formula? Second one on scalability, even if these projects, there's about half a dozen out there, I agree with you, Ethereum's got 30,000 developers, but the biggest problem I find is not scalability itself. Even if you scale to 1,000, like let's say you did 100-fold, you're never going to get to the transaction speeds of a SEP in memory in a trading platform today, right? And obviously there's multi-chain, side chains, the ones that, even if you try to clear through some of the settlement engines around the world, you're never going to get to that speed, right? Even if those projects succeed. So on the scalability part, do you think that the better or the bigger problem is not so much scalability, because those can be solved in a way those nodes are architected, whether you have a closed loop or that being integrated. But don't you think the biggest issue is the ability for one blockchain to integrate to another blockchain, or a blockchain to integrate to an existing legacy platform?
So you're really talking about cross-chain, just for the benefit of everyone in the room?
Well, cross-chain is one of them, but I think everyone knows the whole world goes evolved today around blockchain. It's a very utopian world. We've got to take the 1.5 step before we go to 2.0. And I think people need to crack the 1.5 first as a stepping stone, because unfortunately all our transaction systems around the world have been around since Hogan days, 1976. ANZ still running on a 1976 platform. So those inherent things have to be solved if we're truly going to disrupt, economics that already the 99% of the world's capital is still on, the traditional system.
Yeah, so I mean, that's a fair point. So on your first point about systems, ICOs getting hacked and CoinDash and website getting hacked and all the others getting hacked, that has to do with the application layer. So it's people not doing their research or their thinking or spending their time on auditing their smart contracts. That's how they get hacked. Other ways to get hacked are the phishing sites. And the third way to get hacked is that there's a vulnerability on the website itself, as opposed to this ICO smart contract, where they didn't secure the website, so somebody got in and changed, say, the contract address, and people sent money to that address. So that's a application level issue, as opposed to like an underlying blockchain issue. And I do think that there's going to be a suite of different tools out there, security-based tools, and there's already auditing services that will help reduce that risk. And there's also moves to
trade through an exchange. You don't physically own the asset.
That's right, yeah, centralized exchanges, that is, yeah.
That's a bit of a problem. Like, I'm supposed to own this Bitcoin or Ethereum. I don't hold the private, actually the exchange. All I have is a username and password.
Yeah, so that's true. So if you're trading on centralized exchanges, that's exactly true. There's a wave of decentralized exchanges coming out there, for example, like 0x, like Raider relay networks. But you're right, ultimately, if you own your own crypto, if you hold the keys, you own the crypto. If you don't hold the keys, you don't own the crypto. But we could come up with a system where, you have trusted third parties like decentralized banks or even centralized banks themselves willing to hold crypto on clients' behalf. There's nothing inherently wrong about that. Just quickly on the point about in terms of transactions speed not being as important or not being as fast as the existing systems. Actually, my understanding is, for example, Red Belly blockchain has publishable, verifiable results so that they're able to do 600,000 transactions per second. That means that it's actually a lot faster than what Visa can do at the moment across 300 different machines in different locations. So we might actually reach scalability that approaches that of like a centralized system. But even if we don't approach it like to the same level or better than a centralized system, as long as it's just scalable to an extent, then you can run all sorts of applications like in a really, really efficient manner.
Excellent. No, thanks for that, Michael. We'll take the rest of that offline. Thanks, guys. I've got another question from the back here. We need to keep this moving. We've got a large audience.
Hi, Michael. Just a question about Ethereum scalability. Have you looked at Bitshares or Steemit, their scalability, or the fact that EOS is coming out very soon?
Yeah, so all three projects are from Dan Larimer. They're considered to be scalable because they run something called DPOS, which is called delegated proof of stake. So the issue with delegated proof of stake, or potential issue, is the fact that you actually may have centralization. So my understanding is that most of Steemit's voting is done by only a system of like 70 nodes, and it's done by the founders of Steemit itself. So that's not really, you can't really consider that to be a decentralized network with only 70 nodes or so.
Michael, yes. Sorry, if I can just step in and for the benefit of the audience, just explain what delegated proof of stake is, which essentially is a few, for example, in this room, we have a few centralized people that we vote for those people and say that, not all of us has to validate the transaction. In fact, a few of you, we nominate you to say yes or no, whether or not the transaction goes onto the blockchain. So that's why a lot of EOS and other ones are actually delegated proof of stake and not completely decentralized.
Yeah, so essentially the way it works is how, think about the system we have at the moment. So we have the House of Representatives, we elect, our local member, there's 150 members in the House.
You got the microphone on there, Michael?
Yeah. Hello? Anyway, yeah. So essentially, delegated proof of stake works in the same manner. So you basically vote for delegated nodes, and these delegated nodes will then validate on behalf of you. So the issue with that system potentially is the fact that you might not get enough people actually participating in the network, and so essentially these nodes that have been delegated the powers will just inherently do whatever they want to do because they're not really being held accountable by the people who elect them. And it's an issue we've got in democracy as well. The disconnect between the so-called people and the elected representatives. And so Bitshares, Steemit, and EOS all run on DPOS. So there's a degree of centralization there. In terms of EOS being scalable, they haven't released anything yet. So.
Awesome. Next question over here. Sorry, maybe we'll take that one offline. Very, very enthusiastic crowd we've got here tonight. It's awesome. But let's punch out a few quick questions before we get WAN online. Here's another one.
Alrighty. Testing. Now, there's a wave of institutional money coming in who are waiting on the sidelines, keen to get their hands dirty. I had a question for Toby. What do you think that will look like? Do you think these institutional guys will, take the top 10, top 20, long Ethereum, long Bitcoin, kind of safe bets, or you think they're going to come and play with the big boys and enjoy, muddying their hands in altcoins? And what will institutional money look like?
Yeah,
great question.
Look, I think initially the funding currencies into crypto are where the liquidity is, so it's all got to come via a conduit, and that's liable to be Bitcoin, Ethereum, and some of the other sort of top 10 that have the liquidity because they've got to get the money into the ecosystem. I know, one of my friends is running a fund called the Digital Asset Fund, and they're focusing on proof of stake coins because they believe in running masternodes and the sort of return you can generate sort of crypto on crypto. And that's one particular angle. And as you said, there are going to be people focusing on altcoins and ICOs. I think it'll be like the traditional space where you can invest in a blue chip fund, or you can invest in a hedge fund with complicated strategies making risky bets. So I think it'll spread evenly. It'll come via the top tier coins because basically that's the only way in. But once they're in, it'll filter down the risk spectrum, and it's probably not dissimilar to my own approach, is if I believe in crypto, I want to play in the high beta assets because everything has a high correlation whether we like it or not. So we see bear markets that last a couple of weeks or whatever, it's just red for everything, and then green when it bounces, and the riskier players outperform. So I think there'll be a lot of people chasing those high beta or higher risk assets. So yeah, it's hard to say, but I think initially they come in via the big players, then they'll spread down through the safer bets, and then, like everything, they'll reach for the risk through ICOs.
So a quick follow-up question. Do most funds actually invest in purely tokens or equity or a mix of that?
Right now, my understanding is most of the crypto funds are purely token funds because at the moment it's very hard for an existing hedge fund. You're not going to get a mutual fund investing in crypto just yet. They're probably a year or two away. But it's very hard for people to change their mandates. So if you set up a crypto fund, you've got that mandate to invest in tokens and these new world assets where I don't think yet. I think there's like a statistic saying 80% of hedge fund managers own crypto, but not even 1 or 2% of their funds own crypto, just purely to the regulatory environment.
Click like and subscribe and join me on this crypto current affair. Just because it's double doesn't mean it's a bubble.